Hello students, here's Professor Plinio Monteiro, and this video I will present how you can pick up your market segmentation and then making the choice of the countries and the segments that you're going to operate, how you can develop your offer through over the time to reach these different countries and segments. And this is exactly what we call a positioning in terms of international marketing. And also, this is the same as saying that we are going to develop our marketing expansion strategies. And right now, since you have the segments of countries and you select a few of them, and within these countries you have more data in the consumer level, what will be the next step? Basically now you need to answer the three main questions to deliver the strategy that we're going to explain in the next lectures. First, are you going to enter in these markets incrementally, or are you going to enter in many countries at the same time? Are you going to concentrate or diversify your resources across different international markets? And how much of our strategy should be standardized or customized? Let me explain what's the decision between an incremental and a simultaneous approach for developing your international marketing strategy. In the incremental entry, also named as a waterfall, basically, you're going to start your entry into the country, selecting the more advanced countries in your segments. The idea is that after some period of time, you gain experience, you gain competitiveness, and with the knowledge and the resources that you acquire in advanced countries, then you move to the developing countries. And after some time, you gain experience with this type of country, and after some period of time, then you move to the less developed countries. And what is the idea behind that? The assumption is that if you move to a new country, to a less developed country in the beginning, or if you try to invest everything at the same time, you're going to have a lot of problems, especially in the less developed countries, because of political and economical instabilities. And also, there is an assumption that in the beginning, the prices will usually be higher in a given product. You have fewer customers, you have you don't have a lot of customers, you don't have the knowledge and the technology to reduce the costs. And because of that, if you enter in an underdeveloped country or a country under development with this new offer, you could have a problem because the cost will be too high. And over the time, once you and other competitors gain experience and gain technology and advantage within this market, then the price and the cost will be reduced. And this will be what will let you to enter with this offer in the less developed countries. So you start investing a lot of money and with high prices in developed countries, and after that, since the price will be reduced and your cost also be reduced, then you start moving to the less developed countries. And the opposite of that is to use the simultaneous approach. In that case, also this approach is named as a shower approach. In that case, you're making no distinction, and then you're going to start your offer in many different countries at the same time. And the idea here is that in the first stage, you're going to find a country where you can build very fast all your knowledge and your resources. And after a period of test in one market, in one country, then you move very fast to operate in different countries in a very fast manner. So you start entering in each country very fast, 1 year after another, and in a few years you will be present in many countries in many regions in the world. The assumption here is that only this initial experience it's something and it's enough for helping you in making your strategies in different countries. And also, there is assumption that the cost and the price will not be reduced over the time. So if there is no way to improve your productivity and with that reduce your cost and your price, makes not it makes no sense if to wait to have this reduction until you start entering into a new country. And also, another assumption here is that suppose that this is a very profitable market and you know that many competitors will make a fast move to enter in many countries in the very beginning. So in that case, many companies you prefer to use also this shower approach. This graph will show us one example of the waterfall approach. With these Jews, they entered in the beginning of 60s. They started in the home country. As you can see, in the beginning the market share was small, and then after some time the market share started growing. And by the end of 70s, basically they are facing a lot of competition in home country, and this is exactly the point where they started to move to the other countries in Europe. And they face the same pattern in other countries in Europe, facing a large increase in their market share. And by the end of 80s, basically they start facing a declining value in their market share. And this was exactly the point where they started entering into other countries in Middle East and Far East. And they face the same pattern, and they still have a lot of market shares in these countries. And something that is interesting in this pattern is that once they move to new countries, to new cultures, they need to change and expand the product mix. So basically they added more flavors of their juice in order to have acceptance in new countries and new markets. In this case, it's one example of a shower approach. So this notebook laptop was produced in order to help people in underdeveloped countries to have access to computers in their schools. And since they are trying to solve this problem very fast, and there is a specific strategy to try to reduce these inequalities in education in underdeveloped countries, basically they start with this offer in many different countries at the same time. And the idea is to give access to most of the children in a very short period of time. The second question to develop your international positioning is to choose between concentrate or diversify your resources in different countries in the world. The main question is, should us concentrate resources on a limited number of similar markets, or alternatively to diversify across several different markets? And to make this decision and answering this question, we need to answer 4 additional questions. Who is competing in each segment in each country? What's the size of the market segments? They are enough for profits? The markets and segments are stable, or they are changing over the time in terms of their behavior, their beliefs, and their size. And are you, as a business, prone to accept higher risks? So let's look to this matrix to understand what is the level of these different types of decisions. The first, if you look here in the horizontal axis, we have the concentration or diversification in terms of market and customer target group. And if you look to the vertical axis, we have the country, the diversification or concentration. So the first option should be to concentrate your resources in one segment in one country. For instance, you can concentrate your resources in bottom of pyramid customers in Brazil. This means that you believe that this group is very attractive and this country is very attractive, is a stable country, and it also that you need to have a belief that the segments are enough for giving you the profit that you want, and also that um, you are really fitted to this country and segment. Of course, when you do so, it's a very risky strategy because some things can go wrong and then you're going to lose a lot of money if you're investing everything in one country and in one segment. The other option is to concentrate the investments in one country but to diversify the segments. In that case, will be the strategy number 2. In that case, you're going to search for more customer segments in that country, but you're going to invest most of your money just in that country. In that case, you believe that the country is relatively stable, relatively attractive, but you have more than one segment that is attractive for you and more than one segment that can be profitable. So in that case, you're going to keep most of your investments in just one country, but of course you're going to look for more than one market segments. The second alternative is the third alternative is where you concentrate your resources in just one segment of customers, but you diversify the countries. For instance, you can invest just in you can focus just for mass affluent customers with luxury products, but then you're going to invest in these segments in many different countries in the world. So in that case, you believe that the segment is very attractive, but probably they are not enough in just one country to give you profit, and could be the case that some countries that you're aiming to target these customers, this country could be not that stable, so could be the case to diversify and then look for these customers not just in that country, but looking for them in different countries in the world. And finally, you can have the diversification in market segments and also in countries. Basically, here we're thinking about a large-scale enterprise that can aim and serve these different customer segments, and also a company that will have the resources to invest a lot of money, a significant amount of money in different countries in order to leverage their operations there and to really have market penetration and to achieve a lot of customers in different segments in different countries in the world. And the last decision to develop your international marketing positioning is between a standardization of your strategy and the customization of your strategy. And here you have the last decision to develop your positioning. And remember, when you think about standardization, we're thinking about a mass market approach with minimal adaptation in different countries or segments. In that case, of course, you need less resources for doing that. You usually, when you have a lot of requirements to have managerial controls over all the decisions, usually you're going to have a more standardized strategy. Also, if you believe that you want to create an uniform brand positioning, it's better to use standardization. And if your value proposition is based on economies of scale and scope, this standardization approach could lead your business to success. So this means that standardization is good when you're trying to achieve these economies of scale and scope. And also when you're looking to achieve competitive advantage through the cost leadership. Basically have a lower cost of production in order to have greater profits or a cheaper product. And the customization or when you try to make a more customization on your offer. And in that case, you're going to adapt your market strategy to each market and the market that you enter in. In that case, you need much more resources for doing that. You need to manage a more decentralized governance in order to keep these adaptations with some convergence with the central strategy of your business. Also, you need to use that with some caution to avoid any potential brand confusion. So this means that basically here you need to take care not to deliver different value propositions or positionings in different regions and countries in the world. And in that case, customization will be more successful if the heterogeneity of customers is present. So if countries are different, if countries are different, so the adaptation will be more a better choice. And in general, if your business will achieve competitive advantages through the differentiation, or if the focus in specific targets, segments, or niches, then you can use customization as a way to improve your competitive advantages. And that's it, students. This was the explanation of the 3 main decisions that you need to make in order to develop your international marketing positioning. And that's it. See you in the next video. Bye.